Welcome to the Business Designer Podcast with your host, Vanessa, the place to hear about all things business from starting, scaling, and growing your business.
On this podcast episode, let's talk about unlocking the wealth building power of property investments in business. What's up, guys? My name is Vanessa Castillo-Bell, also known as the Business Designer on Instagram and on other social media platforms. I am known for helping businesses be created, helping entrepreneurs get established as a business consultant for the past 15 years. I am also a business owner myself, focusing on social media, digital marketing, speaking, training, consulting for businesses. And also, I own a social media and website company in which I have a team now that has helped me for the past few years now, but more so the past year, to develop social media marketing for my clients. Now, I've had this business for the past, 12 years now, doing speaking engagements and also doing websites and social media management, marketing, consulting, and you name it. For the past 12 years, I've been doing this. And since I started this business, I always knew that I wanted to reinvest those assets, that revenue that I was generating, into something more equitable, into something more long term. I know we live in a temporary system and things don't last forever. So, what I decided to do was diversify my own portfolio. So, with the money that I took, which is the tactic that many of you should actually do, never leave your full time job unless you know that you can make it into the business world. And for me, for insurance purposes, for providing as a single mother to my son, I've decided to stay in my full time while also having a team to be able to run things on the business end of my business. So with that revenue that was coming in, I said, I don't want to be doing social media forever. I don't want to be doing websites forever. What can I do that I can reinvest this revenue that I'm making for the past, 12 years? How can I save this money, reinvest it into index funds, into retirement plans? Because, I'm getting up there in age and I don't want to be working when I'm 50 and 60 years old. That is my plan. That's why I've hired, investors, and I've hired financial planners to be able to help me with those long-term and short-term goals. And for me, I knew that purchasing properties was the best way to reinvest that money that I've made as a business. So I was a business owner at the age of 20 years old back then, but I also was a homeowner at age 20. I purchased my first brand new property. We built this home from the ground up, and I was very proud of that. And then a few years later, after 12 years of owning it, I, no longer had that home. And after I knew I was committed to purchasing another home at some point for my son. And I did. I was able to accomplish that. And, that little home was something so special to me. And it took a lot of work to take care of. But I knew that I wanted another home and at some point, and I had the funds to be able to reinvest that money into another property. So I'm here to tell you reasons why reinvesting your revenue in properties and equitable assets can be a strategic move for businesses for several reasons. Now, when you reinvest your assets into other properties, you want to make sure that you are strategic with it in the sense of, do I want this under my personal information or under my business? And if you've been paying your taxes, like if you're a business owner and if you haven't been paying your taxes, then you're not a business owner. But if you've been paying your business taxes, then you are a legit business owner. And if you have sales and income coming from that business, you and paying your taxes, your lender will see that as actual revenue and actual legit business, and that can go towards purchasing property either as a business or on the personal level. One of the things is asset appreciation. Properties and other equities tend to appreciate in value over time instead of depreciating, which can lead to capital gains and increased net worth for business. This can provide a hedge against inflation and generate long-term wealth. As we know, everything's temporary. So if you put your money that you're making in your business into assets that depreciate, like vehicles or your little gold pretty watches or your Burberrys or whatever it is, those things depreciate over time. Like for example, somebody gives you a ring, they can go and sell that ring just for the silver, but not for the diamonds because it's worth nothing. So if you get those assets, that revenue, and you put it towards assets that appreciate over time, then you're protected against inflation and really you can start generating long-term wealth. And the other thing is diversification. Holding a diverse portfolio of assets, don't put your eggs all in one basket, including properties, can help spread risk. So if one part of the business faces a downturn, the value of the assets can help offset losses, providing a level of financial stability. So income generation. Properties can generate rental income, dividends, or even interest payments. And by the way, you can deduct those interest payments as an expense within your business portfolio of taxes. So this can supplement the business's operating revenue when it comes to generating rental income or dividends, especially if you put them into your CDs or even index funds. This can be particularly beneficial during economic downturns or when the business experiences, some revenue fluctuations. The other thing, like I mentioned, is tax advantages. Depending on your location, the nature of the business, investing in properties may provide some tax advantages, some deductions, credits, and other tax benefits. The other thing is long-term planning. Investing in properties is often a part of long-term financial planning. These assets can serve as a retirement fund or a source of funding because mama here do not want to work when she's 60, 65 years old. And so this is also for acquisitions or even business development projects. These assets can serve as a retirement fund. So the other thing is leverage. Businesses can often use loans or mortgages to acquire properties, allowing them to leverage their capital and potentially acquire more assets than they could with just their initial revenue. Don't be afraid of just because of the interest rate is high right now, that stops you from purchasing a property. I'm here to tell you it's always going to be either you pay more for the home with a low interest rate or you pay high interest rate with a lower mortgage. So it offsets. So you can always refinance it within a year so that your payment can go down, but at least you purchased the property when the property went down. So right now, properties are going down a little bit, not a lot, but enough for you to decide whether this is something that you can actually afford. The other reason why you should reinvest your revenue or your assets into actual equitable assets is stability and security. Really, like I mentioned, you can't really have true stability and security, forever in this system. But while we're here, property can be that stabilizing force in your life when it comes to financial security, especially for businesses that are only temporary. This can help in building, some creditor confidence, some investor confidence, and make it easier to secure financing or partnerships. This also shows credibility also to real estate agents or lenders or creditors or, investors that you can actually sustain, a business or you're a legit business when you actually have made smart decisions with your assets, into equitable properties. Inflation hedge. Real estate like properties tend to appreciate in value with inflation, so they can protect the business from the eroding effects of inflation by maintaining or increasing their value over time. And final, legacy and succession building. Investing in properties can also be part of a broader strategy for business owners looking to pass their assets on to the next generation or for even estate planning. So when you do have, some money from a business and you invest that money from your business into properties, always have a trust. Have a trust because you never know who's going to try to take your properties, whether it's, family or friends or whoever, say something happens to you. You don't know, what schemes an individual might do in order to take what you work so hard for. So always set up a trust fund for legacy building and include, whether you want family or friends or your children to be able to have that property or that trust so that in case something happens to you, those properties are actually protected. So this is just some tips that businesses should consider when it comes to their financial goals or even their risk tolerance and whether, investing in properties is suitable for you or a strategy that you want to take advantage, always consult with a financial advisor or even a business consultant that, not just, Joe Schmo from the street who purchased a home, or, who, works all these dead end jobs, but actually from somebody who's legit and an expert and, can help you make informed decisions about property investments. Don't take, advice just from anybody. Go with the experts and who, based on the fruitage of their labor, that you can see that they actually are legit business consultants or even advisors when it comes to properties. So these are just my tips. You can always contact me, DM me on the Business Designer on Instagram, ask me more questions. I have made a video that talks about how I went from getting my revenue, my assets from my business and investing them into a property. I was able to do that by, generating that income and then saving it and investing it into a second, a third property now, and using my assets for long-term stability and financial stability. So I hope this was helpful. I'm just somebody who has done it from experience. I'm a business consultant. I'm a multi-property owner now. Going into midterm rentals. I started as short-term rentals, and within 2 months, I was able to now go into midterm rentals and generate properties. So I hope this, is helpful for you. I know, as women, it's a little bit harder, to do things, especially as single mothers. I give my kudos to those who are single mothers out there trying to raise, boys into men, real men out there that are smart when it comes to, investing, when it's smart when it comes to their business, and also within their family. They're smart within their families and can, provide for them. So I hope these are helpful tips for those single mothers out there trying to, make it work in this system, in this temporary system that we have. So I hope this is helpful, and please stay tuned for my next podcast episode.